If you've been paying attention to California real estate, you've probably noticed one market that keeps coming up in investor conversations: the Coachella Valley. With more than 10 million visitors every year, world-class events, and a long history of appreciation, this desert market has become one of the most compelling real estate investment opportunities in the state. And this isn't hype. Over the last 5 years alone, Coachella Valley real estate has averaged about 5.1% annual appreciation, even after factoring in market corrections. Add in major demand drivers like Coachella and Stagecoach festivals, the BNP Paribas Open, PGA tournaments, and a growing population of remote workers and retirees, and you start to see why investors are paying attention. Over my 23-year career, I've guided clients through more than 85 investment property purchases here in the desert. What I've learned is simple. The investors who succeed are the ones who choose the right strategy for the right location. Let's start with short-term vacation rentals. In permitted cities like Palm Springs and La Quinta, vacation rentals offer the highest income potential. A typical 3-bedroom pool home in Palm Springs can generate between $65,000 and $95,000 in gross annual income, while larger La Quinta properties can exceed $120,000 per year. During event weeks like Coachella and Stagecoach, nightly rates can jump to $1,500 to $5,000. But short-term rentals aren't plug and play. Management costs, utilities, insurance, taxes, and city regulations all matter. Net returns typically land in the 6 to 10% cap rate range, but only when the numbers are run correctly and the property is legally permitted. For investors who prefer stability, long-term rentals offer a simpler path. Right now, vacancy rates across the valley sit near 4%, and rents are growing close to 7% year over year. A 3-bedroom single-family home can rent for anywhere from $2,400 to $3,500 per month, with higher returns in cities like Cathedral City and Desert Hot Springs. Cap rates are lower than short-term rentals, but the predictability and reduced management make this strategy appealing to many investors. Then there's the appreciation-focused strategy. Even after the 2023 correction, the median home price in the Coachella Valley is up more than 42% over 5 years. Neighborhoods with mountain views, golf course frontage, and modern updates continue to outperform. Investors who use the property occasionally while holding long-term have seen strong equity growth with minimal effort. The key to success comes down to details. Location within location matters. HOA rules matter. Rental regulations matter, and property condition matters more than most investors expect. The most successful buyers verify permits before purchasing, budget realistic reserves, and always have a clear exit strategy. Looking ahead to 2025, my outlook is cautiously optimistic. I expect 3 to 5% appreciation, continued rent growth, and stable vacation rental demand, especially in the $400,000 to $700,000 price range, where buyer demand is strongest. Real estate investing isn't about guessing. It's about local knowledge, accurate numbers, and choosing the right strategy. If you're thinking about investing in the Coachella Valley and want guidance from someone who's been doing this for over 2 decades, let's talk. I'll help you evaluate opportunities, understand the risks, and build a strategy that actually works. Thanks for watching, and I'll see you in the next video.